You are the managing director at XTB. For those that don't know who XTB are, you're a global investment platform that's seen massive growth in recent years because more and more people are getting into investing. So we're going to get into all of this today, talking about investing. But interestingly, and one of the reasons I wanted to talk to you is you have such a nice perspective being in the industry, but also seeing how people are using your platform, how they're investing their money. So it's going to be really interesting talking to you about all of this. And just to let people know where we're going with this conversation, we're going to get behind the scenes of investing, why people should even care about investing in the first place. But we're going to end up with a bit of a how-to, because I thought it'd be nice to just walk people through how do you actually invest your money? How do people do it? And yeah, so we'll get into all of that. But first of all, we're going to do a fact or fiction. You've got one ready for me, have you?
I do.
Great.
So this is the drum roll now, I guess.
Yeah.
So I guess the statement would be that there are 11.6 million adults in the UK right now waiting to invest, but they just don't know how to start.
So waiting to invest, meaning they've got the funds available. They know kind of what they're doing. They kind of know how to, but they're just not doing it.
I'll change it a little bit. So bringing it back to the number, 11.6 million people are waiting to invest. So something's stopping them from doing it.
Got you.
Okay. It
Right.
could be money. It could be mentality. It could be education.
Gosh. Okay. 11.6.
Mm-hmm.
I think it's slightly lower.
Okay.
I'm going to say it's fiction. I'm going to just go for like 8 million.
Okay.
Am I right?
No, you're wrong. It's true.
Is it true?
It's generally true.
Okay.
But does that number not surprise you a little bit, right?
Yeah, it's really high.
Yeah.
And I think I knew a lot of people aren't investing. And I know, yeah, I mean, a lot of people aren't investing. It is a thing we're going to get into today about why that might be and the kind of things that stop people. But yeah, it's a shame, especially around everything that's going on at the moment and the potential with investing. It's a shame that so many have something blocking them. So yeah, we'll be interested to dig into why that might be and the stuff that you're seeing as well in the industry. Okay, before we get into that, let's talk a bit about you and your journey with investing, because I always think it's nice to sort of meet the people behind the scenes, because investing can be a little bit like numbers, jargon, platforms, tech. But behind all of that is people, isn't it? So tell me about yourself. How did you get into this world? How did you get into being an MD of an investing platform?
I've been in this sector for a while.
Okay.
So 20 years, in fact. So I joined straight from university. In fact, I didn't even want to get into finance originally. I wanted to get into advertising.
Oh.
And then I was talking to a friend of mine at university, and he was had got a job in a graduate role in a really big hedge fund. And he was talking to me a bit more about financial markets. And the thing that always fascinated me was that how everyday life, just geopolitics, economics, everything has like an instant impact on price, on how markets move. It could be gold rising, oil rising, the first lesson I ever learned was the value of the price of oil, which I guess is now so
very relevant,
prevalent, right?
Yeah.
So this always kind of fascinated me, and then I learned a little bit more about it and secured a role in the sector at a company called IFX Markets, which was more of a foreign exchange / small spread betting company. And then I've kind of grown from there, and now I'm at XTB. I've been at XTB for 10 years.
Right.
I'm managing director for the FCA regulated the UK company, and essentially what XTB is, it's a investing app.
Yes.
So our brand proposition is where your money works, and the whole concept behind that is we try to create as many different types of ways that someone can invest or even save, because we offer ISAs. And the idea is that no matter what you're doing, whether it's actively or passively, so passively you can just leave your money in, that it's always earning a return for you.
Right.
You don't actually have to do much at all. We're trying to simplify it as a whole, just to increase the participation rate of investing in the UK community. And as you know, there are 11.6 million people want to do it.
Yeah. Do you remember your first experience of investing?
I do. The first experience I would say, I started way too late.
Okay.
And bearing in mind, I was in this sector for 20 years. So I was working in the sector for 6 years before I even started. And that's crazy.
So you got this job, you knew all this stuff, you were interested in the topic, and yet you still didn't invest for how many years? 6?
The first 6 years, I didn't invest. No.
What do you think your blocker was back then?
I think it was probably money and the fact that I was learning, and bearing in mind, so part of my role when I was first starting the sector was I was executing the trades for our clients
Right.
at the time. So they were calling and saying, I want to buy FTSE or buy DAX or whatever it was, right? So I kind of felt like maybe it's a bit of a conflict if I'm trying to trade at
Yeah.
the same time as them. But ultimately, to be purely honest, I was just chickening out.
Right.
I just didn't want to lose money. And because I just started off in my career, I was like trying to save a bit of money. I wanted to buy a house or a flat. So I was thinking, I don't want to put this sort of stuff to risk. Even though I worked in the sector,
Mm-hmm.
I already was thinking about risk.
Mm-hmm.
And this for me is like the biggest life lesson that we have to try and transfer and try and get out of people's minds. Because for me, investing is saving. It's saving is like what our parents used to do. You
Mm-hmm.
put your money under your mattress or you leave it at a bank. No, that's not what saving is today.
Yeah. I resonate with that a lot because I think even when I did my whole deep dive on financial literacy, learning about investing, I knew it was a really good thing, but it's so hard to actually just take that leap and do it, isn't it? So it's quite reassuring to hear you say that it took you 6 years. Um, did you ever feel when you started and you thought, okay, right, I'm going to do this, and you finally put some money in, you finally got it going? How did that feel? Did you ever feel out of your depth? Did you feel like confident? What was that like?
Probably. So I would say when I first started, I actually felt reassured because I was confident I was doing the right thing. And as long as you're taking a long-term view,
Yeah.
so I would never. Actually, this is the way I always described it when I first started in the industry. You know, when you're trying to learn how to. This is a really bad version, so
I love that though. Go.
excuse me. You know, when you're learning to play catch,
Yes.
right? So
Still bad at that.
yeah, but
Just
you stand close, right?
yeah.
So with my boy, my son,
Yeah.
I'm learning how to play catch. So he'll stand a meter away from me. I throw a little tennis ball, he'll catch it. That's really easy. Investing is easier the opposite way. The
Wow.
further you
Okay.
are, so it's harder for him to catch the ball if I'm standing 10 meters away versus 1 meter. Actually, with investing, it's a lot simplified and more easy if you treat investing as long term, not short term. So from a mentality perspective, if you put money in an investment fund or whatever you want to do, if you want to buy stocks or ETFs, if you're looking at it on a daily, weekly basis, it's so much harder.
Mm-hmm.
Like you have to treat it as a long-term aspect. So it's about how your money grows and earns you something back or a yield back over years, not 1 month, not 1 week. So I started that approach when I first started, and actually that felt me much more comfortable. I
Yeah.
felt quite reassured that that was the right way to go.
Yeah.
And then when the markets are like volatile and moving like this, it becomes a bit more hard to kind of like reflect and understand what you're doing. And again, that's the difficulty, and that's where the kind of mentality I think comes
Yeah.
into it.
There's a lot up here, isn't there,
Mm.
with investing, not just actually putting your money in. And I like that analogy. I think it's funny, isn't it? Because it is, you're absolutely right. I think when I think about investing, I do have that same mindset. I think long term. And so I know for me, it's actually harder putting the money in, but once it's in, if there's an up and down, I'm like, it's okay, we're all right, we're long term, but because it's all going in the right direction. But I think that first step is often, yeah, just quite tricky for people. Okay, so let's talk about your role now at XTB, because I was looking at, I was reading up on what you guys have been up to in the last few years, and it's been quite a ride, hasn't it? It's a lot of change, a lot happening. But for people who haven't come across XTB, like I've got the app on my phone, I use XTB myself. How would you describe it? And like compared to other things, so I think people have said to me recently, there is quite a lot of noise. There's a lot of different options out there. How do you know what to choose? What are the differences? How would you sort of describe what you're doing?
Mm-hmm. So primarily we're an investing app. So the idea is that we try to give individuals access to invest their money in a very simple way without any barriers to entry at extremely low costs. So at the cornerstone of our investing app is the fact that you can buy and sell stocks and ETFs with 0% commission unless you're investing more than 100,000 a month, which is like great for you if you are, but most people aren't. And then therefore you're not paying any commission at all. And you might pay some other fees like an FX fee if you're investing in stocks that are not of like a sterling, for example. But this is again very, very small.
Mm-hmm.
So the idea is that we're trying to lower the barrier of entry and trying to keep costs down so that you're earning a better return. Primarily, that's the cornerstone of our investing app, but we also offer different types of investment products as well. So we have, and this is a product I love, it's called investment plans. So an investment plan is like a savings pot. It basically means that you can create your own kind of like savings pot that invests automatically if you want to. So you can do it like every month or every week. You can set up like an auto payment plan that puts money into this savings pot. Or you can do it manually if you want. And all it is essentially, it's a fund that you've kind of created yourself that is very well diversified. We're very quickly going to roll out different types of savings pots, so you can actually pick something off the shelf if you don't want to create it yourself.
Oh, I didn't know that.
And again, this is trying to not blur, but trying to help transition people from savings into investing, but trying to think of it as the same sort of thing.
Yeah.
We also offer ISAs. We have a stocks ISA, we have a cash ISA as well right now, which is paying, because we have a promotional rate, 6% interest rates on the cash ISA. And then lastly, we also offer interest on your funds just sitting in the app. If you're not actually investing it, while you're waiting and thinking about what to invest, you're still earning something back. And that's why our brand proposition is Where Your Money Works, is because it doesn't matter what you're doing, the app itself should always be giving you a return once you've got your money in there.
I like that. But that's also not where you started, is it? Because I was looking at pre-COVID, XTB pre-COVID was a very different situation. So can you kind of join the dots for me? How did you start and how did you get to that? Because now it seems like you've got all the options, but also you're thinking, like you just said, how can we make that transition from saving like in the bank or whatever to using an investing app easier for people? How did you get here?
Do you know what? When you say it, it sounds like it was really easy, but trust me,
really?
It wasn't. No, it's taken years. So before COVID, roughly before like 2018, 2019, we were focused primarily on slightly higher risk products like a CFD, which is a leverage product. And then we made a strategic shift to focus more on offering every type of investment asset as possible for clients under the same app. And this has taken years in developing these different products and access. And the idea here is that simply that we wanted to open investing up to the masses.
Right.
Whilst higher leverage, higher risk products is for a very niche type of client.
Yeah.
And we felt that the way the world was going and the way the economy is going is that the attrition rate, or the participation rate rather, of investing was going to explode. And the timing worked because COVID happened. And it just went like this. Everyone was looking to invest.
Yeah, so let's talk about that a little bit, because I saw that as well, because I think I had started investing pre-COVID. I had. But it was like no one was talking about it. None of my friends were really talking about it. I kind of found out about it through reading some books. And then one friend was quite into it as well. So they sort of showed me very kindly their portfolio, and they were like, oh, this is the app I use. This is what I do. And I was like, oh, okay, maybe I'll give it a try. But amongst my wider friendship group, people I was meeting, it wasn't sort of everyday chat. But during COVID, something shifted. Can you explain what you saw from your side during that time?
So I think there are these significant kind of like life lessons that educates a mass amount of people and creates this kind of cultural shift. I think that absolutely happened with COVID. So obviously at COVID, you had two massive aspects. So one is that a lot of people were working from home or not working, on furlough. So they're receiving a paycheck, couldn't spend much money because if you remember, you couldn't go out your house for most of the time. It was hard to get groceries. So it was very different. So you're getting money in, but you actually couldn't spend it. And the second thing is that while you're at home, not being able to do anything, kids are driving you mad because they can't leave the house. You've got the news on, you've got your social apps on, and you're seeing the markets are moving because they were moving significantly during COVID, because obviously it was a big shock. It was a market shock. So these two things kind of married together that made people much more interested and also understanding what actually moves market prices and thinking, do you know what? Maybe now is the right time because I don't have these distractions. I don't have to commute to work. I don't have to do that call with my boss or whatever it is. I can actually sit down, spend 3 hours or 2 hours or whatever it is and actually really dedicate myself to it. So I think that was a big shift in mentality. And then since COVID, it's continued. There have also been these extra milestones. So one would have been, there was a bit of a meme stock craze, which was on the front page in 2021.
Yeah.
We also have obviously a cryptocurrency, like huge risk, huge volatility, but actually what it has done for the next wave of investors, the 20 to 25-year-olds, it's actually educated them about price action.
Right, yeah.
So I think actually that's helped facilitate those people to want to invest in stocks and ETFs. And then also after that, we have Ukraine, Russia war. Even now we have Iran. And these are really key things that I don't remember them happening the 10 years before. Like obviously we did have the 2008 crisis, but then the market did rally quite significantly afterwards. I think this has created these massive cultural shifts in our mentality and understanding, which is what's created this 11.6 million people that want to invest right now, but aren't doing it
I'm
for
doing
whatever
it.
reason.
Yeah. I think even another layer to that, I wonder if there's something around the idea of finance before all of this happened. It sort of felt over there. Someone else was sorting it out. It'll be all right. You know, I think even as a millennial, kind of going through the thing of my parents did this, I'll probably just do something similar and it will work out okay. And then with COVID, it brings it all very close because you realize I need to take things into my own hands. I can't just rely on if I do that, that, and that. It'll all figure itself out, because it wasn't figuring itself out. It was these massive shocks like you've just described. And I wonder whether as well there is that just that kind of feeling of I need to know this stuff. I need to get my head around it. I need to be doing it myself, DIY style. Would you have seen some of that as well, do you think?
Definitely. A good indicator actually is that what you just said before is that your friend actually showed you their investing
Yeah.
portfolio. Can you think? I can't think. Maybe 5 or 10 years ago, I don't think any of my friends would have ever done that.
No.
To be honest with you, because I don't think it's taboo. But it's kind of felt. I don't know if it's a British stiff upper lip, like,
Yeah.
oh, I don't share my finances
Yeah.
with anyone, right? But I think people are much more amenable to doing that today.
Yeah.
And I think that helps to facilitate like this level of interest. And actually, you know what? If he's doing it, maybe
Yeah.
actually I can do it.
Yeah.
This is why I think, and I said this many times recently, and is that I want investing to be the same as buying a coffee. I don't mean, oh, okay, I buy a coffee, I buy Tesla stock or whatever it is, right? What I mean is that I want people to think of investing as just everyday life.
Right.
It's just the same as buying a coffee. Just don't focus so much on it as like big risk or, oh no, I've just seen Trump's tweeted something. You know, I think we just have to treat it like every day. It's just the same as having a bank account.
Mm-hmm. Yeah, I think we're probably on the way there, but that still feels quite far down the line, I think. So the people that I talk to, still feels scary. It still feels risky. One of the biggest things I hear from people is, what if I lose money? And I think when times are tight which for a lot of people they are right now, it's hard to think of it like, oh, it's just a part of everyday life. But I think we're definitely moving in that direction. Saying that, I know that you guys have experienced massive growth, haven't you? I think I heard you say that you've doubled your client base in the last year on year.
Yep.
What's going on? Is this just more of the same? It's like people are waking up to it, they're figuring it out. What is this shift that's happening?
So I think it is probably three aspects, right? So I mean, the amount of different types of investment products that we offer can cater for a much wider audience. So, for example, if you want to invest tax-free with an ISA, we have that.
Right.
But then for everyone, obviously you can only invest a certain amount with your 20,000 allowance, right? Then there are going to be other people that think, do you know what, I just want to create a savings pot for my son's university fund.
Mm-hmm.
So we now have that as well. Or it could be someone thinking, do you know what, I see, I want to buy these 5 stocks because my friends told me about it. And actually I looked at it and looks quite interesting. Well, they can do it, and there's loads of different options they can choose, but they can choose us because we offer 0% commission. So the idea is that what's driven part of that is the fact that we've expanded quite dramatically the different types of ways someone can invest or save with a cash ISA, for example. So that just basically makes our platform and our app much more attractive to a wider audience. The second thing I would say is that, generally speaking, participation rates in investing has dramatically increased. Actually, the UK is the fastest growing level of participation growth in the Western economy, in terms of the number of people who are actually now investing over the last 12 months. So right now, 32% of adults in the UK are actively investing. And that can increase by another 20% with that 11.6 million I just talked about. That's bigger than most European countries.
Wow.
And XTB, obviously, we're a global company. So we have like much more now than 2 million active clients around the world. So we're also very, very big across Europe, Poland, Spain, France, Germany. But the participation rates in those countries are also dramatically increasing. So when we talked about this cultural shift, it's actually happening right now.
Yeah. How do we compare to America? Because I always think about this. I hear people talking about the culture over in America is so different with investing, and it's much more of you do talk about it with your friends. It is more of a normal, like buying a coffee kind of thing. What's the comparison like? Are we kind of becoming more like that as a country?
You talked only investing, right?
Yeah. I'm just talking about investing.
So no, US is leaps and leaps above everyone. So the participation rate in the States is, I think it's close to 60%.
60
of adults. Yeah. So it's completely different. But that's also because people learn about like their 401ks. There's lots of structural things that are set up completely different to say Europe or even the UK. But we're catching up. We're absolutely catching up. I don't think we need to get to like a 50 or 60%, but I think the possibility to have a dramatic increase in the participation rate over the next 5 or 10 years is really there.
Mm-hmm.
It's really there. And what will be the biggest driver of that is the mentality shift.
Mm.
So it's people trying to think as don't separate investing and saving. Saving means I stick my money in the bank.
Mm-hmm.
The best lesson someone could learn right now. So in the UK, the inflation rate is around 3%, just over 3%. So every pound that you've got in your bank account right now that isn't giving you a minimum 3% return, you're losing money. It's worth less tomorrow than it is today. So if that's not a wake-up call for everyone, I don't know what can be.
Mm. And I think it's been a bit tricky, hasn't it? Because with that mindset, because we've had some good interest rates recently. So over the last few years, you've seen like 4 or 5%. You can get that kind of thing. So with saving, you kind of think, oh no, this is quite good. I'm actually doing all right. But if you look at historically an inflation rate versus the interest you're getting on your savings, it doesn't keep up, does it?
Mm-hmm.
And I think that's the thing that we've got to be ready for, because those rates aren't going to stay what they are now. I was looking the other day and I was sort of looking at the sort of averages, and it is hard to get kind of 3-4% now on savings, but with investing, there's just so much potential, isn't there? But I think because it's like average returns and there is ups and downs along the way, it's hard for people to visualize that you could actually do better with investing. Okay, I like that thing about just thinking about £1 and thinking about if I'm not getting 3% on that £1, because that makes me think like, oh, I need to go and look at my savings pots again, maybe shift some things around. But I did do that recently, actually. I did just go, okay, we've got to shift that over here. And I think that's another thing, isn't it? Is life's just moving constantly. You've got, maybe you get a new job, maybe you get a pay rise, a pay cut, maybe you have a child. Life's just constantly on the go. Mm-hmm. So I think it's that constant juggle, isn't it, as well, of what worked last year might not be what works for next year. When you were saying earlier about the things you're offering your clients, how does that work in terms of how do you know what people are needing right now, and how do you respond to that? Is that like a conversation that you're having with people and sort of seeing, okay, what's working now, what people are looking for?
I mean, there's no like secret playbook, to be honest with you. It's normally based on like 3 things. So client feedback is a big driver, and clients, believe me, they tell us whenever they want something,
right?
Like, and they want it like this. So client feedback is another thing. The other one is obviously from a strategic perspective, our ability to deliver those products in a timely fashion, because it's an incredibly competitive marketplace.
Right.
Like, there's more than 100 different places. If you include all the historic, traditional big banks, high street banks, they all offer clients, their clients, the ability to invest as well.
Yeah.
So actually, that the competitive field is really, really, really high. So we have to be really fast and really deliberate in what we're trying to do. So our client feedback, our ability to deliver these products in a timely fashion in a really, really strong user experience way. And then the last aspect is just competitor analysis as well, because I'd love to say that we're amazing at everything we do, but there are some amazing brokers out there that do some really amazing and cool stuff that some people in the UK, and I'm not just talking UK brokers, I'm talking there are some brokers in Germany, for example. There are some brokers in America that are doing some things that we think, that's really cool. I think actually there's a potential market for that in the UK or in other countries in Europe. And so this is the other aspect that would kind of feed into our product pipeline.
I kind of have to just share my little take on this a little bit, because when I opened my XTB account, something happened that I wasn't expecting, that kind of adds to what you're saying there. I basically, like 2 days later, and they didn't know that I know you guys, by the way. It's like, this is completely separate because it was in a different email address, all sorts. Someone gave me a call.
Oh, good.
I literally got a phone call from a person, like an actual human, and they were like, "Hi, how's it going?" I was like, "Hello, I'm fine. How are you?" And they were literally like, "Is there anything we can help with? Like, how are you getting on? Are you doing all right?" And I was like, "Sorry, it's 2026. How am I getting a phone call from someone here?" But it was really nice, and that's only happened to me twice, I think, in my whole maybe last 10 years of banking, savings. There's only one other company that I think that's ever given me a ring. I don't love phone calls, so it's I'm not great on the phone, but that I did love, because I just thought, actually, I probably do have a couple of questions, because every platform's different, and it does, like you said already, that kind of barrier to entry of, okay, this feels like a deal. I'm actually putting my money in here. It's nice to speak to a person.
Yeah.
Is that normal? Do you call everyone?
Yeah, we do.
You do?
No, we do generally. So if you have anyone who's got an account, they actually have an account manager. There's a real person that they can speak to.
That's cool.
And this is like a big thing for us, because obviously we've scaled a lot. The number of clients that we have is scaled dramatically. But in my experience, actually people just want one call.
Right.
Because the most important time to call them is actually very, very much at the beginning, just to make sure they understand what they're doing, and also if they need any help or support, because taking that leap to their first investment's the biggest hurdle to pass.
Yeah.
Once they've done that, actually they're pretty much self-sufficient. We've got all the education material on the website, in the app itself. We've got a 24-hour customer support team that they can chat to. We've got an AI chatbot. So we've got all the stuff to support you. But actually, we're very, very key to try and treat people not just like a number. They're an actual person.
Mm-hmm.
It's a big life decision for a lot of people to make that first leap to invest. So we want to make sure they have that support from a real person.
I'm pleased to see that, because I do feel like finance still does feel over here. And we were talking earlier, weren't we, about the view out my window of my house. I can see the whole skyline of the city, and I can see the finance districts in London. And it does feel still like it's the finance people that do the finance things. And then there's the everyday people who are just trying to figure this stuff out. And I think stuff like that, I think we need more of that. I think we need more of those personal touches. And now I got that call, I kind of feel like if I needed to, I could just ring. Mm-hmm. The door's open. Do you know what I mean? So I think that's really good to be reminded of, that people are behind the scenes of these things, actually doing the stuff, putting it all together, making it happen. So we're seeing a lot at the moment in the headlines about markets rising and falling, and I don't want to timestamp this chat too much, mm-hmm. but I don't think this is something that's going to be a one-off and it's never going to happen again. I think this is just a normal part of life now, that we're seeing lots of headlines and crazy things happening in the news. I've heard you say before that when this sort of thing happens, even if markets fall or markets go up, people suddenly get interested about investing. Can you talk me through what you're seeing right now from behind the scenes of an investing platform? What's going on? What are people doing?
Mm-hmm. So I can't give you numbers because we're actually publicly listed on the stock exchange. So obviously we have to keep some numbers for these dedicated release dates. But what are we seeing in terms of participation is significant, really significant. And every time the financial markets is front page news. I don't know if people still do it or not. I like BBC News at 10. I don't know if people still watch this or not, but okay, you did get fine. Whenever the first story on BBC News at 10 is about financial markets, I know that we would have opened a ton of accounts the next day.
And is that when the market goes down as well as up? Because I heard you say it before, and I was like, why would that make people want to get involved and start investing? Why would that happen?
Okay, so let's pick a stock. Just for the sake, this as an example, let's say Rolls-Royce, for example.
Yeah.
If Rolls-Royce shares fell 20% tomorrow, what do you think people would want to do?
Sell.
They'd want to buy it because they look at it as a discount.
I think some people would want to sell, and that's obviously not the right thing to do. But it
depends on the reason. I've just thrown out a fictional reason. Please don't go and sell Rolls-Royce and cause something because I just said that. But what I mean is that a lot of people's mentality is like they see like if something's here and all of a sudden it's here, psychologically speaking, oh, that's a pretty good discount.
So it's the change that's important. So the people with the right mindset will be like, oh, it's gone down, I'm going to get some.
Yeah.
And then other people are going to be like, oh no, panic.
But it works the other way. So if for example, prices are like, gold's a great example. Gold went to like record highs in January.
Yeah.
End of January. And people had that kind of like fear of missing out, the FOMO kind of thing.
Yeah.
So it works both ways. This is why I say it doesn't matter what the story is. If it's front page news,
interesting,
people's awarenesses are kind of like tickled a bit.
Yeah.
And so it'll trigger them into an action.
For some reason, I thought in my head it would be like, oh gosh, more risk, don't want to get involved, back off. But actually it's not. It's drawing people in when we have these headlines. So people need to know what they're doing and they need to be ready for these things. I want to ask you a little bit about, we mentioned it earlier, but I want to get into the blockers to investing. What you're seeing, I know from the people that I speak to online, my community online, I hear lots of different reasons why people are investing, but I'd be keen to get your take on what you're seeing and what you think right now, the 11.6 million. Mm-hmm. What are the things? What are the key things that you're seeing?
So there's a lot of commonality. So let's take one of the previous excuses completely away. So accessibility.
Yes.
Because that's now everyone has the accessibility to do it. It's really, really easy. There's not just XTB. There's loads of apps out there, the way you can actually invest. So the opening the door for people to invest in a really simple way is actually now pretty much there. So that's no longer an excuse. So really the excuses come down to, I don't have enough money to start.
Mm-hmm.
And I really challenge that. And I'm not talking because, okay, you can only afford to invest 50 quid a month or 10 quid a month. Like, actually what we're talking about is coming back to that £1 rule I was explaining before. If you've got that money just sitting in a bank account and it's not giving you 3%, you're losing money on it.
Mm-hmm.
It's diluting the effectiveness of that money. So I would argue that I don't have any money to invest is stop thinking about it as I need 20 grand. I think that's what most people actually say when they mean that. I don't have any money. So it's like, well, there's no point in me investing with 500 quid. I completely challenge that.
Yeah.
Because it's not just about the money that you would earn back potentially from investing. It's the mentality shift that it will teach you.
Got you.
With the £500.
Yeah.
That will give you much better, to keep my financial lingo, dividends later on in life, right? So I think that's one of the main aspects. The other aspect is I just don't know where to start.
Mm-hmm.
And I completely feel that. I completely understand that because it can be daunting.
Yeah, it can.
It really can be daunting. You open InvestNet and you see all these different prices moving around. You go, where the hell do I start? So again, a lot of this would come down to simplifying things and just trying to start small and just do something that's really, really simple that you're just like, okay, fine. So it could be whether you're buying like an ETF. An ETF is like exchange traded fund. It's like a very well diversified fund that has invested across different assets. It could be stocks, bonds, whatever. Sounds quite complicated, but actually it's really simple when you spend the time to kind of learn into it. And this is where AI as well can help. So we have like AI chatbots. We have we're developing different things within AI to help break down that barrier, to help simplify things for clients so they know what to do or how they can start.
This episode of Money and Us is sponsored by XTB. I think a lot of people sit on the edge of investing for quite a while. Maybe you've experienced this yourself. You know you probably should be doing something more with your money, but you're worried about getting it wrong. You feel like you need to understand everything before you start, so you wait. But one of the things I've learned over the years is that confidence doesn't usually come before action. It comes from taking small steps, learning as you go, and building understanding over time. And investing can be just like that too. It's not about trying to get rich quickly or making perfect decisions. It's about allowing your money to grow over the long term and developing your confidence along the way. That's where XTB can help. XTB offers access to a range of investment options alongside educational resources and tools designed to help you learn and make informed decisions as you go. If investing is something you've been meaning to explore but haven't quite known where to start, XTB could be a useful place to begin. To find out more, just click the link for XTB below this video. And remember, your capital is at risk when investing, and it's important to understand what you're investing in. Investment values can rise or fall. Always do your research. With the ETF, I just want to just say it a few times so people get this in their heads. ETF is not, it's one of those bits of jargon that's like, you can kind of gloss over it. You can hear it and be like, ETF, oh, it's another one of those things. But it's such a key thing that if you can get your head around just ETF, you can get off to a really good start, can't you, with investing? And I think, like you just said, it can be a very diversified fund that can just be your starting point to jump in and then get going. So if you're taking one thing from this listening today, I just want you to hear ETF and think, I'm going to research that, go and have a little look, go and find one on a platform. Because for me, that is the bread and butter of my portfolio is just ETFs. It's very simple. It doesn't need to be complicated. I want to come back to what you just said though, about the sort of £10, £50, 500 quid. If I could wave a magic wand and help everybody experience what it's like when you have started, versus before you start investing, and like you just said, what that does to your mentality and your mindset and the confidence it gives you. I wish I could do that. But it's one of those things you have to experience it to understand it, don't you?
Yeah.
Do you see, once people get in and they start investing, do you see that confidence grow with your clients?
Absolutely. And I mean, clients that stay with us for a long, long period of time, because that what they do is they treat their investment account as similar as a savings account effectively. Right. And it's just something that they're investing in over a period of time. It doesn't, so you can invest actively. So
Yeah.
when I say actively, I means that you have to log onto the app and you go, okay, I'm going to deposit, I don't know, £1,000, whatever, and I want to buy this stock, or I want to buy this ETF, or whatever it is. And you can also do it passively. So passively basically means that you can create these conditions in the app to do it on your behalf. You don't have to think about it. You don't have to worry about it. So you could do like, okay, my payday is on the 18th of the month or whatever it is. Okay, so on the 20th of every month, I want to put £100 from my payday, goes straight into my XTB account, goes into an investment plan, and it's topping it up every single month. So you can create that and you can facilitate that as well. So again, the idea here is to try and treat it in a really normal fashion, exactly the same as kind of like a savings account or something like this. It's just taking care of it. It's the only question you need to decide is how actively you want to be involved in that process.
Yeah. But like you're saying, the long-term approach is a really good thing. So actually being super, super actively involved might not necessarily be super helpful once you've got going as well.
Depends on your mentality.
Okay.
So our short-term products.
Yeah.
Okay. I'm a terrible trader. I am shocking. I'm like in the whole scale.
Have you dabbled then a little bit?
I have. Yeah, absolutely. In the whole scale of like the best traders and the worst traders, I'm like way down there. But it's not because I don't know what I'm doing. Like I've been in this industry for 20 years. I see it. Like I saw the Pakistan Prime Minister tweet about a potential deal that basically gave Trump an off-ramp for Iran. So I was like, okay. So it's pretty obvious to me what's going to happen now. The NASDAQ is going to rally and oil is going to fall, and it took 20 minutes and it did it. I knew what was going to happen because I'm in this industry. That doesn't mean I can do it.
Right.
And the reason why is
didn't
because
benefit you at all.
No, 100%. Trust me, I wish it did, but it didn't in that specific example. But the reason was because mentality-wise, I can't handle it. Actually,
Right.
I really can't handle it.
Go on, explain that.
Well, if I'm watching, if I've got a position open, and I'm okay, I'll just have a little punt for a couple of hours. I'll buy oil or something like this. Like my heart starts doing, and I can't handle it. I'm looking at it too many times. And every time I'm looking at it, I'm just one click away from doing an action, selling early or whatever it is.
Yeah.
So I can't handle it. So I very quickly decided, like, no, that's not for me.
Right.
It doesn't mean that there aren't people out there that can do it. It's just, it's not for me. So when you're treating investing, you're doing two things, right? So one is you're trying to decide, okay, what do you want to achieve in the long run?
Yeah.
And then you're also trying to pick, I don't like saying a strategy because I think by saying strategy, it overcomplicates things.
Okay.
But you're trying to pick a strategy or a way of doing it that also fits yourself and fits your lifestyle and what you can handle.
I don't think I've ever heard anyone say it like that. And I've spoken to a lot of people now about investing, but I don't think I've ever heard someone say you've got to do it to fit your personality and who you are as a person. Because I think I've heard people sort of describe it as your life, have you got kids? Have you got, how's retirement looking? That kind of thing, but not actually how you're wired, in just how you're made. Like, this is who I am. I don't do well in those stressful situations. It's not for me. So that's really helpful. And I think all of us can sort of think about, how am I wired? Do I like risk? Do I not like risk? Am I good with risk? Even if I like it, am I good with it? Because that's different. Coming back to risk then, you've just talked about trading. And I kind of feel like I'd love to get your perspective on where does that fit? Because you said it's not for you.
Mm-hmm.
In the grand scheme of risk, maybe it's helpful first to just talk about all the risk, like the different phases you can go through, or the different options that are out there relating to risk, going from like really, really not risky at all right through to very risky. Could you piece that together a little bit for us, just to sort of, with trading involved as well? We've just talked about ETFs. People are going to be like trying to get their head around that. What is that kind of landscape? How does it look, and how does it all fit together? So, big question, sorry, but
no, it's fine. No, please, like, good. And keep talking about how terrible a trader I am. That's really helping my ego.
Yeah, that's also great.
So, first of all, let's talk about the difference between trading and investing.
Yeah.
So, trading is short term. Investing is medium to longer term. That's when I say trading, what I'm talking about is taking a position on like a 1 day or even a week at most. That's what trading is. It's basically taking and mostly it's also using higher risk products, which uses leverage, because then you don't have to put as much in. But the idea is, and there are hundreds and hundreds of thousands of different people in the UK right now that are actively trading. They do it with XTB, they do it with our competitors, and it's great for them. They know what they're doing, and they feel confident enough to do it. So really have to figure out what sort of works for you, whether you can handle short term or whether you're much more suited for longer. Majority of people are more suited towards medium and longer term, which is why trading is still relatively, it's a niche area not just in the UK, but in Europe as well. So when I'm talking about trading, this is what I mean. It's more tied to that kind of niche. In terms of investing, again, it comes down to like, what are your goals? Are you and the simplest way to start is to treat investing in exactly the same way as you save money.
Mm-hmm.
The biggest percentage of people that save money right now, the biggest percentage of them do it in like an automated way.
Okay.
What I mean by that is that every single month they put money into a savings pot. So their mentality is actually already there.
Yeah.
They're already thinking, so why are they doing it? Why are they putting it? Oh, because they're building to something.
Yeah.
That means that they're already creating the mechanics of what they do with every pound that they earn from their employer or from whatever revenue source they get it from. They're thinking, right, I now treating my money seriously and professionally. And what I'm going to do is I'm going to put this amount every single month into a savings pot. The majority of people who are savers are doing that. So all we need to do is take that same mentality, but think of it more as an investing account.
Mm-hmm.
And treat it in the same kind of way, and they'll already be like 2 or 3 steps ahead of someone who isn't doing that and starting afresh as well.
Okay, so there is such a range then of like what you can get out of investing, your personality, what you're aiming for, your goals. What would you say to somebody who, and these people say this to me a lot, what if I lose money? Am I going to lose money? Is it going to be something that, because even for somebody who's never done it, even if they're taking a long-term approach, they're choosing sensible things, they're being strategic in their approach to it, they're not choosing risky options, there's still that fear of losing money. What would you say to that person?
I'd flip it.
Go
I'd
on.
flip the conversation. Okay. So I would say, well, what about the fear of missing out? I'm not talking about FOMO, buying a stock that's rallying 30%. What I'm talking about is, what about the fear of not investing? The fear of the yield that your money, your hard-earned money that you've paid taxes on,
Mm-hmm.
that can earn you over a long period of time if you're not investing. Because, okay, there is always the risk of losing money. It's ingrained, this is an area that I would love to work with the regulator on, because I think it's ingrained. It's this back of a cigarette risk warning
Risk
that is
warnings,
ingrained in our personality. Go, okay, I see an ad about investing or an investing app. Be careful, capital at risk. Like, that's really telling me I'm losing money.
Mm-hmm.
And I think we really have to be careful how we and the words and how we communicate, because that same risk warning doesn't say, by the way, if your money's in a bank and you're earning less than the interest, you're already losing money.
Yeah.
There's no risk warnings for savings accounts,
Mm-hmm.
really, are there? So I think we have to be careful with this. But I would flip it and say, what about the fear of actually not putting your money to work and earning a yield? What about the fear of letting your money sit in a bank account where actually it's being diluted?
Mm.
So I think we have to change the conversation.
Yeah, and it's that thing of one of the big learning points for me, because I didn't do a brilliant job when I started investing. I chose something someone recommended, picked another thing randomly off the website. It was a bit of a mishmash. My strategy was not good, but I just wanted to get started. But it is that thing of there's such a range of risk that you can find stuff that is just not that risk. There is always risk. We always have to keep saying it, but it's just not. It's not what people think. And I think that's the problem, is there's that perception of it's so risky. You see the charts, it's like da 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 da. But actually, when you zoom out and you look at the big picture, it's like, I don't know, like an all-world fund. It's actually like the general trend is up. Like over the long term, over 10, 15 years, it's up. It's not actually as bad as people think. But there are some bad players, aren't there, as well, out there saying, telling people to do bad things that are not really very sensible at all, and then you see people lose money. We saw the Manosphere documentary. Have you seen that?
Yeah, I did. Yeah.
And the stuff that the people on there are getting away with, I don't know if they are getting away with it, but it looked like they were getting away with some of the things of, come and choose what I'm investing in or trading. You'll do really well. Come and pick this, pick that. And it's just people just losing money left, right, and centre. And I think that gives investing a bad name, even though it's completely different. Has that kind of been in the dialogue a little bit with you guys since that documentary came out, or is it just part and parcel of it's already going on?
It was actually really disappointing to see that, because first of all, what the guy was talking about was more trading, and it was selling signals and this sort of thing. And unfortunately, that was something that happened way before COVID. That was like from 2015. You
Right.
always had these kind of rogue operators, so to a degree, selling their kind of trading signals, which you'd buy for a fee. And it's a big conflict of interest because all they're doing is that they're earning money by
Yeah.
introducing you to trade on a certain platform. And potentially sometimes they're also making money based on how much money you're investing as well. So it's a huge conflict of interest. The regulator's really strong on it, which is really
That's
great.
good. Yeah.
So in the UK, it doesn't really happen as much. And that's why you see some of these people, the person from the Manosphere, he was selling signals to trade at a platform that's not in the UK.
Mm-hmm.
So I would say let's treat that as a lesson for people. If you're in the UK, use an FCA broker. Because we all have to adhere to it's one of the best reputations in the world is from the FCA. And because the reason why is because we all have to adhere to really the highest level of standards. They've even brought in the consumer duty recently as well, which is elevated standards and even more. So as long as you do your diligence on who you're actually investing with and who you've chosen, and it's an FCA regulated broker, then it doesn't matter if it's us, it could be anyone else. As long as they're FCA regulated, we have to adhere to really, really strict standards.
Can you explain to someone who might not know how they can check that if they're looking at a broker?
Yeah, so simply just go to the FCA website.
Okay.
So go to the FCA website, they have a search register, type in the name of the broker, and then see that they're FCA regulated. You can see what permissions that they have. And just to be extra safe, go to the website of the broker. If you scroll down to the very bottom on the footer, you'll see what their reference number is under the FCA. So you make sure you're checking the right broker.
That's really important to know. Okay, let's get into then how to do it. How do you even get started with investing? So we've talked a lot about like the reasons people are not investing. And one of the things I'm trying to do with my platform is just to demystify the whole thing and just make it seem, like you say, moving towards it's like buying a coffee. It doesn't need to be as scary as it might seem. But people do say to me as well, okay, there's all these brokers out there, there's platforms out there, there's that bit. Then there's the tax wrapper bit. And then there's then once I'm on the platform, how do I actually get started there? But then before this conversation, we were talking a little bit and you were saying, but there's also the whole mindset side of it and the psychology that goes on of that on that process too. So should we just try and do a little step by step of like, how would you even let's think of a person. Somebody has got their savings pot sorted. They've got their emergency fund. They've not got high interest debt. They're managing their finances well month to month. They're earning okay, but they've not started investing yet. Step one, what do they do?
Pick a broker.
Okay. We've just talked about the FCA register. Yep. That's a good point. So then what do they look for next?
So in terms of finding a broker, obviously have a look at the products that broker is offering. Make sure they're FCA regulated. Have a look at reviews to see what people like yourself, Anna, are talking about the broker as well. Make sure that they're somewhat trustworthy and reliable. And then once you picked your broker, then obviously you need to start. But then you need to start thinking about, okay, so you have a pot that you're ready to invest in. I assume this is the example that we're saying. So are we going to invest all of that pot or just a little bit?
We're looking at somebody who wants to start regularly investing. So they're thinking, okay, I could probably manage a little chunk a month. Okay. It's not masses, but I want to just get going. And also I'm trying to build my confidence as well. So what do I do?
Okay. So if it's a little bit a month, I assume it's going to be, can we put a number on it?
Let's say 200 quid.
Okay. So I'd start first of all with ISA.
Okay.
Because it's tax free. So that £200 a month, you can invest up to £20,000 per year, and every money that you make from it is not subject to capital gains tax, so it's tax free. So for me, that's a no-brainer way to start.
Okay, immediately, where are they finding this ISA? Where is that happening?
Okay, so it's with your broker. So
Okay.
you need to find a broker that offers you a stocks ISA or a cash ISA. Okay. So a stocks ISA we offer XTB. We also offer a cash ISA in case you don't want to put money into the market, you just want to earn an interest yield on it as well.
Do most platforms offer them?
No. So not everyone has a license to offer ISAs. You have to. It's registered under the HMRC, and not a lot of brokers offer stocks ISA and a cash ISA alongside each other. Oh
yeah, the two of them. Yeah.
But we do both, and also it's cross-referenced. So it sounds really simple, but actually it's really complicated because it's our responsibility as an ISA manager to make sure that you only invest or deposit £20,000 per year into that ISA during every tax year. If you don't, we get fined. So we have to make sure that the money you put into your cash ISA with XTB and your stocks ISA together is 20,000.
Yeah.
So we've also created that, so it's also cross allowance checked effectively.
Okay, so we're doing that because we don't want to get taxed, right, on that money. So that money goes in, and does that mean that everything in there, long term, the growth, all of it, you can take it out at the end, and there's no tax to pay?
Yes.
Lovely. That's a rarity in these days, isn't it? To
Mm-hmm.
have something that you can sort of wrap up in that way. Okay, so you said get the platform sorted, get the app, whichever one you choose, get your tax thing sorted. So you've got your ISA, stocks and shares ISA. Now what?
So now think about, so we already said we're going to invest £200 every
Yeah.
month. Now, what are we going to invest in, and what is the goal of that investment
Okay.
account? So I would probably ask yourself certain questions. So one question would be how often are you probably going to check on the performance?
Okay. Why is
Because
that important?
because it might dictate what you invest in. Because if you want to check every week or every 2 weeks, probably, and you're comfortable doing that, then having some stocks as part of your ISA portfolio is probably okay. Because individual stocks are more volatile than say an ETF. If you're going to, no, I just want to put my money in and forget about it, I'd probably think more about on the ETF side, because it's a diversified fund that has invested across different asset classes. And probably it's something that you treat it more like a savings account, and then just grows over time, as long as that ETF continues to perform, which you can check on the app how it's performed over the last 5, 6, 10 years, for example.
And you said earlier, just coming back to right at the start, you saying about there's going to be more offerings in the future that are more like off the shelf. Just make it happen, because I think this is a bit of a block at this point. Is when you've got your stocks and shares ISA set up, you're in your app, and then you're like, right now, what do I pick? And it's just very overwhelming. Do you think we're going to start seeing more things like that, where it's just like, I just want that, and that looks right for someone like me?
So yeah, so what the product you're talking about is we have called investment plans. So probably by the time this podcast is published, it will be live.
Great.
So you can have investment plans off the shelf. And what I mean by that is that you've got two different options you can choose. You can build your own investment plan. And I say investment plan, it's a savings plan. It basically automatically invests your money at set periods across the assets that you choose, whether it's I want to buy the top 10 UK stocks, for example, or I want to buy, I know, the big seven, the magnificent seven or something like this, or the certain ETFs. And then you've got off the shelf. So off the shelf, it could be, okay, I want to invest automatically into this AI fund, which is an ETF fund that has invested across different AI or robotics stocks. Or it could be one that's focused on defense contracts, for example. So there are different things off the shelf that you can pick that, again, can simplify it a little bit and help ease that way to getting started.
Great. So they've got to the point where they've chosen their thing. They go, right, this is what I want to have in my portfolio. Now what?
Hit go. No, like deposit. Yeah, deposit the money and place the trade. That and that's the hardest bit. I bet there are so many people out there that have built their own different plans, and then just okay, I'll come back to it.
I know for a fact there are, and it is. I've had someone said to me recently, like I've been researching this for a year, and I still not gone and done it.
Yeah.
So what would you say to somebody in that situation who's like done all the right things, done all the steps we've just said, and they're still sitting there going, oh, I don't know.
Okay, so two things I would say is the first thing is we talked in this example about investing £200 every single month. So don't set it up monthly. Just put in £50.
Yeah, that's a good idea.
You actually don't need thousands and thousands and thousands of pounds to get started. We allow people to invest with £10. Just put a little bit in, and that will, I think, it will break down that kind of mentality block. They think, oh wow, and then you can see that £10 all of a sudden becomes £10 and 5p or 10p or whatever it is. Might become £9, but is that really hurting you? No. So it's like, start with even a small amount if you're really worried about it, and that will build your confidence over time. So the other aspect I would say is that, coming down to the argument again, okay, fine, put your money in a bank where you're not earning 3%, and that, I guarantee you, is losing.
I've actually been wondering about doing this as a little experiment of just doing the two things, just two chunks of money, and just tracking them each month, just for my own, I don't know, sense of like proving it again that it is they're different things, and one of them has got so much potential and the other doesn't, and it's just reinforcing that thing.
But again, I come back to the example that you were saying earlier, in fact, about how you asked your friend and they showed you that, like, I think if I could have like a great milestone for me would be talking openly about not your finances. You don't need to show off
Yeah.
or, oh, I only have this amount of savings or whatever. It's actually talking about investing with your friends or in your social community, and also reaching out to people like yourself, because I think you do a really, really great job breaking down this barrier to help people understand what they need to do, how they do it, and simplifying the language that we talk about it. I think that would be a really big help, because instead of just placing that where you like speak to a friend or
Yeah.
speak to your family or whatever, or all my brothers invest. So like this is a really, you've got that access to build your confidence as a community.
Yes.
It's right on your
Yeah.
doorstep. You just need to try and
Yeah.
stop being British with your stiff upper lip.
Yeah, but having said that though, everyone's got that one Uncle Joe who has that story of this, this one time I tried investing and I lost £30,000 or something like that. Like people do know people. So it is a real, as much as you've got that other friend who's quietly investing and it's doing well and it's just chugging along and they're doing really well, you've also got these horror stories. And I think that is why it's so difficult for people to kind of go over that hurdle. But I think when you actually dig under those stories, which I have done, I've spoken to different people, you find out what they did with their money, what they actually invested in, and it's so different from what we're talking about. It's not a diversified portfolio, long term. It was much more risky. And then you think, well, I don't need to do that. I can do this other thing. And I kind of wish that we had a different term for it. The riskier investing versus the strategic long-term investing. It's all called investing. And I don't think that helps people. I think basically it just gets confusing because you just think, well, if I'm doing that, does that mean this is going to happen? And I wish we had another word for it, for this kind of thing that we're talking about.
Yeah.
Have you got any ideas? Can you come up with one?
Well, I don't know, but I mean, the fact that you did a really great job there, because everyone's got an Uncle Joe who's lost £30,000 or whatever on invest, but actually trying to delve into it, understand it.
Yeah.
That's exactly what you should do.
Yes.
That's exactly what you should do.
Yeah.
It's not like, oh, you lost. Okay, fine. I shouldn't do it. It's not, okay, why did you lose? What did you do wrong? What lessons can I learn from that empowers me better in the future for the decisions I'm going to make?
Yeah, that's so true.
So that's absolutely the right attitude to take.
Yeah. And I think since I started my investing journey, it's weird because I knew what would happen because I obviously studied this stuff now. I know what I'm doing. But when you do see that percentage is gone up by X percent, you're just like, oh, wow, who knew?
Yeah.
And it still surprises me, even though it's like, a few years in now, I'm like, I've seen it year on year. I know what's going on. I know that this is working well. I know what I've chosen is the right thing for me and my family. But it's like still, I think because I wonder if it's partly because times have been really weird and really tough for people, that when actually something works, it's like, oh gosh, oh wow, what a surprise.
Yeah.
Something actually is going up for once. So I think what you said earlier is really helpful about that thing of even if you just put a little bit in and you just watch it happen and you actually get that confidence of seeing that number go up, it can go down, but that trajectory over the long term is really important, isn't it? Okay, this has been really helpful because I just think hopefully people are going to listen to this and have some tangible steps of, okay, maybe I can do it, maybe I can give it a little go, even if it's a small amount of money. Just a couple of things before we just talk about the future and where you see things going with investing. If somebody's about to just sort of go for it and have their first dip into investing, is there anything we've talked about this a bit, but I just want to make sure we don't miss anything out. Anything they should expect emotionally when they do it for the first time?
Well, good question. Really good question. They will probably, my guess, they will probably check the app more than they're going to check Instagram for the first few days. That's probably what I would say.
I love that.
Yeah.
That is,
and that's not
helpful.
It's not a bad thing. It's not bad because it shows that you're engaged. But this is probably something that I would expect to see after you've placed that kind of first bit. But the most important thing is over time it becomes normalized and you just treat it like an everyday account. And this is the sort of trend that we're seeing with new investors. Majority of people that come into XTB, they're new people. They've never invested before. And that's the same across the different parts of Europe as well. So everyone's kind of like on a very similar journey. You're not alone. You're not the only one doing it. Participation rates across Europe and the UK is going through the roof for a very specific reason, which means you're doing the right thing.
Great. Okay, that's helpful. I need to not look at my app then. Let's just keep that there. No, I don't. I'm actually very set and forget myself, which is in this context, it's great. On other parts of my life, probably not so good. A little bit like, yeah, that'll be fine. It's not fine. But with investing, it's very handy. Just come back to it every now and then and go, oh, it's gone up. Excellent. Lovely. Beautiful. Okay, let's talk just briefly about the future of investing. I mean, we've seen this massive trend of more and more people getting into it. I know the government's trying to do a lot right now to get people investing, just educating people. What's going to happen next? Do you think this is going to continue with everything going on around the world? Do you think we might see this dip a little bit? Where are things going from your perspective?
No, I think the participation rate is only going to continue to increase. So the UK is the fastest growing, the UK has the fastest growth of new investors across Europe. And I think that trend's just going to increase. And I think it's because of, we're not going to take credit for it, but I think companies like XTB, I think we're doing a really good job because our brand proposition is, again, it's where your money works. Actually, it's a culture that we're trying to create and to shift in terms of what people are trying to do and how we treat money and the value of money and these life lessons that you learn. So it's about breaking barriers to entry, simplifying what we're doing, not just the language, but simplifying how that app works and trying to make it as really easy as possible for someone to do what they already know they should be doing. We don't need to convince people to investing. We need to be able to open the door so that they can do it in a really easy way and don't get scared off.
Yeah.
That's our job. That's the different products we create. That's the user experience. That's the costs are working for them, and the app is performing as they expect. So fast forward 5 or 10 years, I would expect the participation rate in the UK to be close to 38%. I really do. I really believe that we can get to that level if we continue doing all the strong cultural shifts that we're already doing. Not just XTB, but I mean the UK, the government, the FCA are trying to do it as well. They're creating this targeted support, simplified advice. Again, breaking down barriers to entry, making people understand how they can get started in a really easy way, without having to go through the nitty gritty of, I'm not allowed to provide advice and you could lose money with your investing and all this stuff. It's about trying to make it easier and much more stable for people.
Yeah, I mean, I've seen the shift myself massively since I started. And one of my big investing mistakes was just picking the platform my friend had, not checking the platform much. I mean, it's a good platform, but it was just like high fees, really clunky to use. Even just putting the things in my portfolio was just hard work. It just wasn't easy. And now the landscape's completely changed. Like, I couldn't have done it on my phone back then. Now you can. The apps are just getting better and better. If somebody's using XTB, do you want to hear from them if they think it could be better?
Absolutely. But I don't think I need to ask them. They tell us already, which is a good thing.
Quite loud, your clients.
Well, we encourage this. There's so many different ways they can get in contact. As you said with your example, you speak to your account manager, for example.
Yeah.
Now we want to hear, because again, of those 3 drivers for change in the things that we do, like one of the big drivers is client demand.
Yeah. Okay. And do you think we're moving towards a world where DIY investing is going to be like the norm? Because I know a lot of there's fund managers, you can get people to do things for you. There's obviously always a role for financial advice. Definitely, big fan. But is it just going to be like we're all just DIY investors now and this is just normal?
Yeah. I do, but I would change the label from DIY, because I don't know about you, but when I think of DIY, I think of when you're fixing up your house and stuff. So it's the same as when you're investing. Okay, so I'm picking what I'm doing. I actually think in 5 or 10 years, AI will drive a hell of a lot of our interaction with investing apps, and how we're participating in that and how we're managing our money will be much more automated. So I think it'll be less DIY. It'll be much more kind of autopilot.
Yeah. With AI though, would you have any caution around how to talk to AI in this regard? Because there's AI on platforms that you'd be using, but then there's also people talking to ChatGPT or like Claude saying things like, "Oh, tell me what to invest in." What would you say to people that are doing that?
I wouldn't be using AI at all to learn what to invest in, but I would use AI to understand what you want to invest in. So if it's like an ETF, okay, so you could go on Claude or ChatGPT and say, okay, break down this ETF for me. That most of the ETFs already have this thing called key information documents, which kind of like gives you a full, really easy language assessment of what actually it invests in. So I would use ChatGPT to understand how, like, to educate yourself on the different type of investment strategies or in different types of things that you can invest in. But I would absolutely not use AI to tell you what to invest. But that's just today. I can see a world very, very quickly where AI will be much more integrated in the things that we do in an investing app. Like we have a team of AI engineers we're working very strongly on this. I hope in the next like 3 to 6 months, we'll be able to announce some more developments in that area as
That's
well.
cool.
So watch this space.
Great. I was going to ask you about what changes in the tech are on the way, but I feel like you've just answered that, because it feels like that's the kind of answer across the board at the moment, isn't it? It's like integrating AI and figuring out how that fits into all of this and making it safe as well, and making sure that's a helpful way of using it. All right. So this has been really helpful. I really hope, if people are listening, I just hope this has just been a little bit tangible, so you can start to think about your journey. If you have done all the steps that we talked about, maybe this is the right time to start investing. Obviously, you just want to say, you need to get your finances in order first before you invest, don't you? Emergency fund, no high interest debt, make sure that you're managing your money well. Very important to have those foundations done before investing. But once you've done those things, it is a natural next step for people, isn't it? So thank you so much for all of your wisdom. I want to ask you, I'm going to ask the same question to every guest at the end of each episode. Joshua, what does wealth mean to you?
Oh, good question. I'm not prepared for that. Okay.
Good. That's better.
Wealth for me means being comfortable. That's
Go on.
that's the immediate word I had in my head when you said that was comfortable.
Tell me more. What does that mean?
That means for me is that I don't have to worry too much. I can go do the things that I want to do. Wealth to me doesn't mean that I own multi-million-dollar houses or whatever. It just means that I can live my life without the stress of money.
Mm-hmm. Which right now is a really big deal, isn't it, for a lot of people? So that's great. It's really helpful. And investing, I guess, could be part of that journey. For many of us, it will be. So thank you so much. And thanks for coming on. This has been really, really helpful. And hopefully for many has demystified getting started a little bit with investing. So I really appreciate your time.
Thanks for having me, Anna.
Listening to this podcast, you'll notice that we cover a lot of different areas when it comes to money. But one thing I hear all the time is, how do I actually pull this together and apply it to my own finances? And that's why I wrote Money Mentor. This book takes all of these key ideas, from mindset to managing your money to growing it, and showing you how to apply them step by step in your real life, month to month. It's not about being perfect with money. It's about having a clear plan and knowing what to do next. Inside the book, you'll also get access to practical tools, including my own budgeting framework and additional resources to help you actually implement what you're learning. Because knowing what to do is one thing, but putting it into action is where everything starts to change. I've had so many messages from people saying that it has helped them to finally feel clear and more in control of their money. So if you're ready to feel more in control of your finances and build a system that actually works for you, you can access Money Mentor using the link below this episode.